Hey everyone, welcome back to Corporate Decoder, the place where we dust off those corporate filings so you don't have to. Today, we are cracking open AGNC Investment Corp's latest proxy statement, which, let me tell you, might sound boring, but it actually gives us a sneak peek into their plans for world domination, or at least the mortgage market. AGNC Investment Corp, a big player in the mortgage world, is asking its shareholders for some key approvals. Think of it as spring cleaning, but for corporate rules and executive pay. We will break down what they are asking for, what it means, and why you should care. The main event is the annual meeting in April where shareholders get to vote on important stuff, like electing the board of directors, deciding if executives are getting paid too much, and even changing some fundamental rules about the company's stock. Let's dive into the details without getting lost in the legal jargon. First up, it's election time for the board of directors. Shareholders get to pick who will be steering the ship for the next year. Each person elected will be serving for 1 year. Then, there's a proposal to increase the number of authorized shares of common stock. Basically, they want to have more shares available to use for things like raising money or making acquisitions. Next is a non-binding vote on executive compensation. It's shareholders' chance to say whether they think the top dogs are getting paid fairly. Finally, they want to ratify the appointment of Ernst & Young as their independent public accountant. It is like a quality check on their financial reporting. If you owned AGNC stock on February, you are eligible to vote. Each share gets 1 vote. You can vote online, by phone, or by mailing in your proxy card. Your vote matters, so don't skip it. AGNC wants to make it super clear where you can find all this information, because of course they do. You can find their proxy statement, annual report, and other important documents online. AGNC isn't your corner store, they're a major behind-the-scenes player in the US housing market. They provide a lot of money to help keep things flowing, which makes it easier for people to buy homes. They run a pretty lean operation with operating expenses as a small percentage of their equity. They declared billions in dividends. Keep in mind, past performance doesn't guarantee future results. The company is led by a team with decades of experience investing in mortgage-backed securities, or MBS for short. AGNC's board includes a mix of independent directors, meaning they aren't employees or closely tied to the company. This helps with objective oversight. The lead independent director and vice chair have a very important role in guiding the board and working with the executives. When picking new board members, the company focuses on things like ethics, experience, and diversity. They want people with a mix of backgrounds. AGNC tried to get rid of some rules that made it hard to pass certain changes, requiring a supermajority vote, but it has been tough to get enough stockholders to participate to reach that vote threshold. So in the past couple of years, the company has been putting these changes on hold. The board has committees that focus on different areas like finances, executive pay, and making sure everything is done ethically. Each committee has a specific job to oversee different aspects of the company. The audit committee keeps an eye on financial reporting and things like cybersecurity. The compensation committee focuses on pay for executives and making sure there is a good plan for who will take over leadership roles in the future. The company is careful about how they manage risk, with committees overseeing financial, regulatory, and cybersecurity risks. AGNC is trying to act responsibly when it comes to the environment, society, and governance. They issue a yearly ESG report that provides disclosure on environmental, social, and governance issues. Independent directors get paid with cash and stock, aligning their interests with shareholders. They are also encouraged to own a significant amount of AGNC stock. Directors and executives aren't allowed to engage in things like hedging or pledging their stock, which means betting against it or using it as collateral for a loan. If a director doesn't get enough votes to be re-elected, they have to offer to resign. It's a way to make sure directors are accountable to shareholders. The company has policies in place to prevent conflicts of interest when dealing with people connected to the company. The board is recommending that you vote in favor of all the director nominees. They believe these individuals have the skills and experience to guide the company. The company wants to increase the number of shares they are allowed to issue. This gives them more flexibility to raise money or make acquisitions. The board recommends that you vote in favor of the executive compensation, giving executives confidence in the work they do. The board is asking you to approve their choice of Ernst & Young as their independent auditor. It's a vote of confidence in their financial oversight. The audit committee has signed off on the financial statements for the past year and recommends that you approve the appointment of Ernst & Young. The document lists the names and backgrounds of the company's top executives, giving you a glimpse into who is running the show. These are the top executives whose pay is being scrutinized. The company had some great performance numbers in the last year, with a large economic return compared to other companies in the same market. The stock prices have also done well, and all of this with the lowest operating costs out there. AGNC says it pays its executives based on performance. It's about linking pay to results, attracting and keeping talented people, and aligning everyone's interests with the stockholders. The board has really been talking with the shareholders. They are interested in feedback about their choices. This has influenced how they pay their executives, how they handle corporate governance, and the programs they have in place. The company uses a mix of salaries, bonuses, and stock to pay its top executives. A big chunk of their pay depends on how well the company performs. A corporate scorecard decides those annual bonuses. This scorecard looks at financial performance like returns and stock prices, plus strategic goals and how well they're managing risks. Top executives also get equity awards. Stock awards will have great performance results when the executives do a great job running things. The plan is to be as responsible as possible, and this has made them focus on what a company should do and not do. We look for an incentive that is not excessive and is appropriate. The big bosses' bonuses, they also go with what they were told to do by the compensation committee. How did those bonuses turn out? See the compensation table. They set goals each year for the compensation that should be earned based on hitting certain marks. Check to see how they did at the end of the year. In an ideal world, performance numbers would have been the goal. AGNC offers savings and health benefits. In the modern world, the employees get 401k matches and benefits for their health. The company does not want special executive perks and benefits, for example, jets. The committee consults with the CEO to get their input on how the other executives are doing. The executives and board are not able to play with the stock. To a large extent, there are agreements that provide for certain payouts upon termination. The company also said it can claw back executives' pay. So there it is, the long and short of AGNC's latest corporate playbook. They are trying to stay competitive, pay their executives fairly, and most importantly, keep those mortgage markets humming. So what do we think about AGNC after this decoder moment? Well, they are playing in a pretty volatile sector, but they have a ton of experience in mortgage-backed securities. Their commitment to low operating costs is definitely a plus, as is the high percentage of insider ownership for the top executives. However, some investors are likely to stay cautious about potential interest rates and the overall direction of the housing market. Ultimately, AGNC is in a sector that could be considered a moderate risk to your average portfolio, so stay smart, keep researching, and don't bet the farm on one company. Thanks for tuning in to Corporate Decoder. If you enjoyed this deep dive, give us a thumbs up and subscribe for more plain English breakdowns of complex business documents.